8:06 p.m. Eastern Standard Time on the East Coast, 1 hour and 6 minutes post daily close. We're in a very tricky spot here with what's coming up tomorrow and what could be an extremely devastating event in cryptocurrency and the stock market alike. You see gold and silver's taming up. They're starting to rev up here for some bad news tomorrow. Gold starting to I wouldn't say skyrocket, but it's definitely pushed over a very key level. We're up over $1,820 an ounce. We got silver at $22.73. What I've done, as you guys know, is I bought GPL when it was at about 21 cents. I don't think it went under 21, but I was right at the cusp of 21 cents. I bought on this side over here. And I was hoping that was the bottom. It was a very aggressive trade. It came back up. I didn't do anything. There was no point. But it was like 21.07, like right in here, because it hit this bottom part, 21.08. Few candles, bought it, 8,800 shares. Today was good though. Today we were up about 6.6%, 6.2%, and such a steal at that price. Such a steal. I threw 2 G's at it. And then B2 Gold as just to try to get some kind of preemptive move here. As IQ knows, I bought into this at not too far ago, like $3.52. It was just, I think it might have created some kind of reversal bottom here. The rest of the gold market reacted, but B2 Gold did not. And I'm looking for some kind of little short kick up here with what's coming out tomorrow. And I think gold is going to, at least like we talked about before, finish at 18.29. So I think tomorrow could be a nice little, maybe 5 to 6% pump for B2 Gold. I'm not saying it's going to be anything crazy. I did throw $3,000 at B2 Gold and got about 880 something shares. So I got about $5,000 in those two commodities right now. And yeah, so that's basically with that. We had the close on Bitcoin. We closed 42,700 plus. And then XRP closed just over 77 cents. Actually, no, it was just, was it over? It might have been just under 77 cents. I think it was just under 77. It was like 76.9. It was weird. 76.995 or 98 something. But we close in a weird spot here, guys. The reason is because we needed to close over 80 cents on the daily. I mean, on this daily candle, so that we could try to signify some kind of strength. But we are in a very tough spot here. We don't have a lot of volume, and it's going to be hard to get out of this range. Yes, we're dealing with this rare Japanese candlestick pattern that could potentially show itself, reveal itself. But with that daily close, that's exactly what we would have been, pulling up for on this candle. If we close just like this and pushed over 80 cents, this could be your... No, it can't. It can't. It can't even do... Well, it could, but it's got some work to do. But we could get what we're looking for. But this right now with the volume looks like a fake out, unfortunately. So we're going to watch that very carefully. But now I'm going to read this. Just a little technical analysis real quick on XRP. Because right now we got to focus on the Fed for tomorrow. 75 cent support, 83.8 cent resistance. So that's the way it's going. Okay, so like we said, 83.8 resistance, 75 cent support. And I think we're following the same track. It's going to reveal itself if we decide to pull up, but with this volume and what's coming tomorrow, I wouldn't trust this market. So let's get into the things I wanted to read real quick. So, Fed Chair promises CBDC report within weeks. And Federal Reserve Chair Jerome Powell's renomination hearing before the Senate Banking Committee hearing today. Powell said that a Fed report on central bank digital currencies was expected in the coming weeks. Federal Reserve Chairman Jerome Powell testified at his renomination hearing before the Senate Banking Committee today that the central bank's highly anticipated report on CBDCs and stablecoins was soon forthcoming. Powell, whom President Joe Biden recently renominated to head the U.S. Central Bank for another 4-year term, assured Senator Mike Crapo, our Republican, at the Senators pressing that the long-awaited report on central bank digital currencies would be published within weeks. Senator Crapo pushed Powell as to why the Fed has not released its report on central bank digital currencies as it said it would. Citing delays in the Fed publication, Powell responded by saying that the report really is ready to go and I would expect we will drop it. I hate to say it again in the coming weeks. Moreover, The Fed chair gave some details as to what Congress and the public might expect from the coming report, explaining that it was more an exercise in asking questions and seeking input from the public rather than taking a lot of positions on various issues. Nevertheless, Powell testified that the Fed does take some positions. While the nomination hearing was predominantly concerned with broader issues in the economy, such as inflation and interest rates, cryptocurrency remained a theme. In his opening statement, Senator Sherrod Brown, Democrat, Ohio, warned of the dangers of cryptocurrencies to the U.S. economy. Senator Brown said that the Fed needs to take seriously the systemic risks that threaten our economic progress, like cryptocurrencies and stablecoins. This was not the first time that Senator Brown expressed his trepidation towards cryptocurrencies and stablecoins. Last month in a Senate Banking Committee hearing dedicated to stablecoin discussion, he called cryptocurrency a new fantasy economy and warned that stablecoins made it easier for people to risk their money on volatile and possibly fraudulent crypto assets. The Fed report on a central bank digital currency has been long awaited. In February last year, Jerome Powell called a U.S. digital dollar a high priority. So we have that. But then this is what I really wanted to read. Jerome Powell says the Fed is prepared to raise rates to tame inflation. And this is what you need to pay attention to. Bottom line. All the other mumbo jumbo, this is what you need to pay attention to. So Jerome H. Powell, the Federal Reserve Chair, told lawmakers on Tuesday that a rapidly healing economy no longer needed as much help from the central bank and that keeping inflation in check, including by raising interest rates, would be critical by enabling a stable expansion that benefited workers. Mr. Powell, who President Biden recently nominated for a second term as chair, is confronting a complicated economic moment as he moves toward another 4-year stint as head of the world's most powerful central bank. He provided his latest thoughts on the Fed's challenge during his confirmation hearing before the Senate Banking Committee. The economy is growing swiftly, but it has been buffeted by repeated waves of by the blah, 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 and by a surge in inflation that has provided stronger and longer lasting than economists expected. Workers are finding jobs and winning wage increases, but the rising costs of housing, gas, food, and furniture are pinching shoppers and tanking consumer confidence. So the CPI is going to come out tomorrow, and that's the Consumer Price Index. So that's going to be very interesting. The Fed is charged with maintaining price stability, and its officials have recently signaled that they could raise interest rates several times this year, which now we know because of what JP Morgan said. It's not going to be 3. We're going to have 4 rate hikes this year in 2022. To try to cool the economy and prevent rapidly rising prices from becoming permanent, Mr. Powell, who is widely expected to win confirmation, reiterated this blah, blah, blah. If we see inflation persisting at high levels longer than expected, if we have to raise interest rates more over time, we will, Mr. Powell said. But the central bank also has a second mandate. It is supposed to guide the economy towards full employment, a situation in which people who want to work and are able to do so can find jobs. Cooling off the economy can slow hiring, so trying to foster a strong labor market and trying to set the stage for a strong labor market can require a balancing act for policymakers. Mr. Powell squared the two goals in his testimony, suggesting that keeping price gains under control would be critical for achieving a sustainably strong labor market. What to know about U.S. inflation? Inflation. Explain what is inflation. The Fed's pivot, Jerome Powell's abrupt change of course, moved the central bank into inflation-fighting mode. Fastest inflation in decades, the Consumer's Price Index rose 6.8% in November from a year earlier, its sharpest increase since 1982. Why Washington is worried, policymakers are acknowledging that price increases have been proving more persistent than expected. The psychology of inflation, Americans are flush with cash and jobs, but they also think the economy is awful. High inflation is a severe threat to the achievement of maximum employment, he said. If rapid price gains start to become entrenched in our economy, the Fed might have to react starkly to choke off runaway inflation and risk touching off a recession. Mr. Powell said to avoid a painful policy response and instead set the stage for a strong future labor market. He added it is important to control inflation. If inflation does become too persistent, if these high levels of inflation get entrenched in our economy and in people's thinking, then inevitably that will lead to much tighter monetary policy for us, and it could lead to a recession, and that would be bad for workers, Mr. Powell said. So I wanted to read that. I hope that helps. Make sure that like button. It's just a little bit of knowledge of what's about to come. We're already confirming we're going to get rate hikes, 4 of them this year. Tomorrow is going to be a disaster when the CPI is released. If it comes over 6.8, expect all markets to collapse. Gold and silver markets might be okay. As you can see, they're having this preemptive push up. But all else shit can hit the fan tomorrow and we could have a bloodbath. We could have blood in the water. So I have some money to the side, have some funds, and let's see how the CPI and the what comes out from the Fed tomorrow goes.